Good morning, ladies and gentlemen, and welcome to the Bloomsbury Publishing plc investor presentation for the preliminary results for the year ended 28th of February 2021. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply click on Q&A, type in your question, and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. You'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Nigel Newton, CEO, and Penny Scott-Bayfield, CFO of Bloomsbury Publishing plc. Nigel, good morning.
Good morning and a very warm welcome to all of you, and thank you for coming to the Bloomsbury presentation. On the covering slide that you see there, a typical family home is depicted in the last 15 or 16 months. And as you can see, books are being made use of in several of them, which is one of the overarching themes of this presentation. If you move on to slide 1 now, you'll see that we describe what happened in the Bloomsbury financial year ending the 28th of February 2021 as a step change. It was a critical year in the company's history as strategies long put in place came to fruition, including in areas like the Bloomsbury Digital Resources Initiative, which we'll describe to you further on in this presentation. They were our highest sales ever and our highest PBT since 2006, when we published the final of the 7 books in the Harry Potter series, and it was only just about this number. Revenue is up 14%, which we ourselves were amazed by, because we significantly outperformed the industry growth. Most publishers had a good pandemic, if you wish to put it that way. And as I said in the statement, that the surge in reading was one ray of sunshine in an otherwise very dark year. So industry growth was about 2%. The Nielsen BookScan growth was about 5%. Consumer growth was 7%. If you take even the highest of those numbers, you'll see we did more than double with our 14%. We issued not one, but 3 profit upgrades as the year unfolded, and after it ended, we separately increased guidance for the year we're now several months into. We had a number of bestsellers. They always make a big difference, but as you will hear in this presentation, we aren't dependent on bestsellers in the way that some general publishers are, because we've counterbalanced that with academic publishing, which has a completely different and highly attractive financial profile as well. And to be clear, Bloomsbury is really the only publisher of substance that combines academic and general publishing. The general publishers tend to be owned by offshoots of big media conglomerates, HarperCollins by News International, Penguin Random House by the Bertelsmann Media empire, and so on. Or they are university presses owned by the ancient universities themselves, or the European information giants like Reed Elsevier, or and so on. So that's where the sizzle, if you like, can occasionally appear in Bloomsbury, combining the explosive upside potential of bestseller publishing, as we've demonstrated more than anyone with the runaway success of Harry Potter, but many, many other great authors as well, often books that we knew would do well, but sometimes, and wonderfully, books that take off out of nowhere due to some happenstance, and combining that with the steady higher margins on the other hand of academic publishing, where markets are known and well identified, where you can buy mailing lists, for example, of all the lecturers in a particular academic subject and have a much clearer idea of what your results will be. People are critical to businesses like ours, and in our expansion, we've been lucky to recruit some of the best people in industry from some of our best competitors, trying to make Bloomsbury a kind of academy of the best. Finally, dividend. We increased by 10% the final dividend, and you'll see a graph further on here which shows 25 years of dividend growth in one form or another. But there is also a special dividend of 9.78 pence, which was our way of repaying and thanking Bloomsbury shareholders who supported us last April when we had a 5% equity placing at a time when 100% of our retail customers worldwide were shut down, and even Amazon, as a mail order company, were deprioritizing books in favor of essential goods. And there was a scenario at that time which showed that the company would need extra cash. And we were very fortunate that our shareholders readily supported us. But as the pandemic unfolded and the surge in reading emerged, much to everyone's surprise and delight in the summer, it became clear that that money wasn't needed, and nor was were the salary reductions which the whole company took. Penny and I, for example, had a 30% salary reduction in April, May, and June. We stopped it then in July, and by December, we could see it wasn't necessary, and we repaid staff. So that's the story of our turbulent last year. I know that every company has an equally turbulent story, but we've been lucky that ours had a good outcome. If we may move quickly to the next slide, that just sets out a few of the numbers I've referred to here. The revenues were £185 million. The profits were 19.2, up 22%. The fourth bullet is important. A strategy that's been in place for a number of years now, Bloomsbury Digital Resources, really paid off as universities switched to remote teaching of their students at home when they couldn't go to their campuses. And so what are Bloomsbury Digital Resources for newcomers to the company? They're big databases like the Churchill Archive Online, which contains 800,000 pages of documents and speeches and cigar receipts and telegrams from Winston Churchill's lifetime. And another one, perhaps our most successful two, are Drama Online, which has about 3,000 plays aggregated from many publishers and several hundred critical texts. So these combine with hundreds of hours of video footage of actual play productions from the Royal Shakespeare Company, the National Theatre, and so on, the Globe Theatre. So these are subscribed to for an annual fee or sometimes an outright purchase fee by university libraries, and access is entirely closed. It's only given to people with a university library card. So that has been a very attractive area to us as a major academic publisher. We're one of the largest independent publishers of academic monographs in the world. And this is a new way to sell our content in addition to traditional print books and ebooks of the very same works. Another very successful one is in the professional area. called Bloomsbury Professional Online, which is a service for lawyers with many essential texts that they would need to refer to, in particular working at home as they have done for the last 15 months without access to the firm's library. So that was a bit of background on bullet point 4. And then in the final bullet, just to tell you that we made an acquisition near the results period, about 3 weeks before. We made a second one about 4 hours after we announced these results the week before last, called Jesus, and we'll tell you about that later on. May I hand over now to Penny to talk about some of the financial highlights in more detail to give you a better idea of Bloomsbury's business model. Thank you.
Thank you, Nigel, and good morning, everyone. So starting with the financial highlights, 3 key points to highlight here for you. First of all, as Nigel's mentioned, the 14% growth in revenue. Second of all, the 22% growth in our pre-tax profit. And thirdly, the 15% increase in the EPS. So delivering on all those key levels. Moving on then to the results by division. So for those of you who aren't already familiar with our story, one of our key strengths is that we are diversified between consumer publishing and non-consumer, so B2B, if you like, publishing. And this sets out the results of those by division. And as you can see on the left-hand column, consumers had an excellent year. So we were up 22% ahead of the market, as Nigel has mentioned. And also I draw your attention to the margin at the bottom. So that's our pre-tax margin has increased from 9% to 12%. And there were really 2 key things behind this. First of all was that we had a higher proportion of what we call backlist sales. Backlist are titles that we published at least a year earlier. We tend to have a higher margin on those because we've already taken a lot of the costs associated with them, and therefore what comes through with increased revenue is more profitable. And we also had a higher proportion of ebook sales during the year, and ebook sales tend to be higher margin than print. Then on the non-consumer side, you can see 1% growth in revenue, and that's really a story of accelerated market trends in there, which we'll come on to more later on in the presentation, with our phenomenal digital growth offset by a much tougher print market, as expected, with libraries and academic institutions turning away from print as they were literally closed. Then if we look more detail at the revenue that makes up those 2 divisions. So within consumer, we have adult and children's. So they're books for the adult market and the children's market, as you'd imagine. And you can see 17% growth in adult, 26% growth in children's. So phenomenally strong across both sides of that business. And then within academic and professional, just highlighting there, 3% growth there. And that's again the structural market trends that we've been anticipating coming through. Moving on to channels on this slide, we think there's almost never been a more important year to be looking at the sales channels than there was last year. And you can see there, so we're platform agnostic. So whatever content we produce, our aim is to get it out onto whatever the channel most works for our customer or our consumer. So you can see print remained extremely resilient. So the overall print we were selling was up 8%. Ebooks, as you can see, had a phenomenally strong year, up 64%. And we've been seeing very strong ebook growth on the academic and non-consumer side, but it's very strong on the consumer side as well. Audiobooks, which is an exciting new area for us, up 31%. In a normal year, I'd say 31% we'd be very excited about. We actually see there's more potential there. And BDR, so Bloomsbury Digital Resources and other digital resources, you can see that phenomenally strong demand for those. And that's because we have the products that people want and need, both in terms of the quality and their ability and their usability and accessibility. So overall, very strong to be up 56% in digital. We're very pleased with that. So if we move on then to another one of our key strengths, which is our strong balance sheet, highlighting three key areas in here. First of all, the working capital, which you'll see halfway down the page. And there you can see we're very focused on our working capital. We don't want a penny more tied up in our stock than it needs to be. And we've worked very hard. Those of you who followed our story for some time know how hard we've worked and how much we've delivered in terms of reducing that number. But to be able to generate another 4 million reduction there, even against the growth we've seen in our top line, is a testament to extremely hard work on our part, and also the slight change in the channels, the sales channels. Second line from the bottom there, you can see our net cash is very strong, and we'll come on to that more in a minute, but it means we've been, after the initial sort of crisis by June, July time, as Nigel mentioned, we were in a much stronger position, and it's meant that we haven't missed a beat in our strategy over the last year. And the third thing to point out is in this box on the top right-hand corner, which is to talk about what we've done with the cash post-year end. We've acquired Red Globe Press, 3.7 million. We'll talk about head of use, that's 8.5 million, and the special dividend of 8 million. So there's about 20 million of that 54 million balance, which we've already committed, leaving us still in an extremely strong position. So moving on to sharing a bit more detail about our cash flow. We share this slide with our investors and potential investors because we think it's helpful to see what we use the cash for and also how it moves throughout the year. So you can see there that second column in from the left indicates that the key driver behind the cash generation has been our trading. So our cash generation this year was 142%. So obviously it's incredibly strong that we can turn our profits into cash at such a rate. And then the other key thing to mention is second in from the right is the 8 million we raised from the equity raise, which Nigel mentioned, which this year will be sort of repaid effectively in the form of the special dividend. So then moving on to how we use our capital, and our fundamental thing is that we have three priorities for continuing to grow the business. And these have been our priorities for some time. So first of all, through acquisitions. So we've mentioned we've completed 2 acquisitions during the year, and then we've completed 2 shortly after the year end, which we'll talk to you more about. And there is plenty more to come. Second of all, Bloomsbury Digital Resources, that key growth area for us. And third of all is new content. So new content is on all sides of the business, but particularly it's investing up front in consumer new titles, new works by our existing authors, and that's where we want to continue to invest. And you can see on the right-hand side there the scale of the investment in those. And of course, and extremely importantly, our dividend policy of cover of just over 2 times, supported by a very good cash cover. So if we then move on to acquisitions, and Nigel, if I can hand back to you to take us through those.
Thank you very much, Penny. So the first of the 2 acquisitions we made was the Red Globe Press about a month ago. It's a high-level academic publisher. It was part of the Springer Nature Group, which is half owned by Macmillan and half owned by Springer in Germany. And they were consolidating the subject areas they covered and decided to get out of business management, study skills, and psychology. And we were only too pleased to receive those from them because, amongst other things, it produces 3 further digital products to go into the ever-expanding Bloomsbury Digital Resource Division, in addition to the preponderance of its turnover, which will be print books and ebooks, just going through the normal Bloomsbury academic division. The price we paid was reasonable from our point of view, less than a half times turnover, £3.7 million. And we're welcoming about 20 or 30 new staff from Red Glow Press who are coming across to us. We're based in Bedford Square in London at such time as we are in our offices, which hasn't been for 15 months. The second acquisition, which is not on this slide because it came 3 hours post year end, as I mentioned earlier, is the brilliant general publisher, Head of Zeus, started by the serial publishing entrepreneur, Anthony Cheetham, who also started Century and Orion and was deeply involved with Quercus. Why were they attractive to us? Because they're specialists in about 5 genre areas, which Bloomsbury itself are largely not in, but ones that we would be pleased to be in, including, if you like, commercial women's fiction. They had a recent bestseller set in a brothel in ancient Pompeii, told from the woman's point of view, a very bold and splendid novel called The Wolf Den by Elodie Harper, who is a journalist. They also have a very high seller in another one of their areas, which is their Apollo list, books relating to art. And they have a very attractive book about Hans Holbein, which I shall flash up to the screen for you, that is currently one of the most reviewed books of May and June. And in addition, one of the many attractions to us of this list is their science fiction list, an area Bloomsbury are largely not in, and a trilogy called The Three-Body Problem by Zhijin Liu. This extraordinary science fiction tableau has been grasped by Netflix, who are making it into a series. In fact, not just Netflix, but the 2 people from HBO who produced Game of Thrones, David Benioff and H.B. Weiss. So when that comes out on Netflix in late 2022 or sometime during 2023, we're hopeful that the 3 books in the trilogy, which is based on, will be propelled to even 1/10 of the success of the books of Game of Thrones, following the huge audiences that were found for that epic television or film production. So there are other aspects to Head of Zeus, but they're attracted to us also because they got some very good people working there. Their sales are in the region of 8 to 10 million pounds, so not huge, but a very nice bolt-on for Bloomsbury. I also mentioned on this slide that we integrated 2 acquisitions made over a year ago, the academic publisher Z Books and the theatre publisher Oberon Books. Moving on, if I may please, to the next slide, I'm going to let Penny tell you what those stepping stones there mean.
Thanks, Nigel. Well, these basically talk about our dividend history and our most recent dividend. So we talked about, Nigel has already shared with you the 10% increase in our final dividend and the special dividend, which is in that pale blue right on the right-hand side of the slide. But you can see there that our priorities around delivering progressive dividends for our investors have been in place for a very long time. So looking to non-consumer, the non-consumer side of our business in a bit more depth, the things I'd like to highlight here for you. First of all, as we mentioned, the 3% revenue growth. We've talked about the digital growth, and that came from Bloomsbury Digital Resources, BDR, and the ebook growth. So overall, that delivered 57% digital growth. So you can see that's an incredibly fast and exciting area. And then you can see there the profit took a slight dip in the year, and I think that was really impacted by a couple of things. I think we had lower print sales, and print sales in this area of the business are high margin, and also there's an element of stock. So if you sell through lower print, as we did in this area of the business, but absolutely not in consumer, you have more stock to be looking after, which is still valid, and we will still sell it through. But we have very tight and strict provisioning policies. We also saw some larger one-off deals than the year before as a higher comp. But moving on to the right-hand side of the slide, you can see that profit growth from BDR, so growing by 2.2 million to 2.9 million, and phenomenal growth in the year, and also that we're on track to deliver the goals that we set ourselves 5 years ago of revenue and profit. So if we move on then here, the next two slides set out some of the metrics and colour behind the BDR for you. So within BDR, we have a three-pronged approach to growing our business. First of all is selling more of our established products. So we have market-leading and dominant products in certain key verticals, as well as a very wide suite of products in other subject areas. And you can see here our renewal rates are over 90% here, and we have over 13,000 titles on our Bloomsbury collection. So you can see the breadth and the appeal of these products. We also do partnerships, and this is where with people who own exceptionally good content that we want to produce with Taylor & Francis, a branch of Informa, also Human Kinetics, a huge US publisher. They own content in areas that we aren't working in, but this way it enables them to take, we're offering a chance to be on our excellent platforms and use our infrastructure that we've developed. And the fact that we have people of this caliber coming to us speaks, I think, volumes around the quality and effectiveness of what we've built. And then, of course, there are new products. So we're always adding either new modules in areas where we're dominant or expanding. Nigel mentioned Red Globe Press, and that gives us new areas to expand in. So we're expanding both vertically and horizontally in the depth of our products. So then moving on to some more key points to highlight here. Top right-hand corner, 73% increase in the number of customers over the year. So what was interesting was the growth in the second half was even higher in the first half. So what this tells us, and what we will share with you, is that these are products that academic institutions have been turning to for some time. That's why we're in this market. We can see the shift, but also that when they absolutely had to enable digital teaching and learning at very high speed, not only did they turn very quickly to our products, but they kept buying them. So this wasn't a quick response in the first wave in March, April, when they were sending students home, but the demand, if anything, has accelerated since. And you can see there in the bottom left-hand box is that our trials were over 4 times what they had been the year before. So the level of interest and demand is really very strong indeed. Moving on then to special interest, which is the fourth area of our business. And this serves, this is very specialised publishing and focused on key communities. So we do wildlife, cricket, wisdom. I don't know if any of you are fans, the nautical side of things, and some great non-fiction work here. And you can see there we had a pretty good year, actually. I think this is an area where we tend to be quite focused around offline communities, and we did very well in certain areas. But overall, now we can see this being an area, as people are able to do more, there will be more demand for some of these areas. Having said that, as you can imagine, the birds, and in fact, a book on caterpillars did extremely well last year as people were confined to looking for birds and caterpillars. So passing back to Nigel to talk through our adult trade business.
Thank you very much, Penny. The consumer division is broken down into adult and children's publishing. As you can see, the adult division had a spectacular time, with sales up 17% and profits 145%. A novel called Piranesi by Susanna Clarke, who many years ago wrote Jonathan Strange and Mr. Norrell, that became a big film, was one of our bestsellers. Another was, you can see illustrated on the right, Such a Fun Age by Kylie Reed. And perhaps our biggest success was an old book, which was very much in demand in the summer, called Why I'm No Longer Talking to White People About Race by Rennie Edo-Lodge. And that book from about 2017 was #1 on the paperback list all summer, as people sought to understand the events following the death of George Floyd and the Black Lives Matter movements, which grew following that. So quite a range of successes, including in the United States as well, where we had books like White Rage and Outlawed hitting the New York Times bestseller list. On the next slide, if we may, this is a quick look at the strategy in this division. And we've strengthened our personnel, as you can see there. And we've entered a number of new publishing areas and consolidated in several others. Cookery and crime are two of our great strengths. The Dishoom cookbook and Lose Weight for Good by Tom Kerridge were both absolutely outstanding sellers, as people sat at home and had to produce 3 meals a day, 7 days a week. But I'll tell you why that's going to last in a minute. So if we could go on now to children's trade, we have two exceptional properties, Harry Potter and the young adult fantasy novelist Sarah J. Maas. The sales were spectacular in both of those brands. Harry Potter up 7% and Sarah Maas by a staggering 129%. So this was a very good year for children's. Many children found that their liking of books increased during lockdown, 26% of them, according to National Literacy Trust data. But going on in the background of all of this sales focus of the company is a very robust program in environment, society, and governance. And I will hand back to Penny to take you through our goals in that area.
Thank you, Nigel. Well, as we say here on the right, our core business of publishing books to inform, educate, and inspire is itself a social good. And those values run absolutely core to everything we do at Bloomsbury. So picking out some of the highlights during the year and things that we think are most relevant to investors. On the environmental side, we've made great progress on the sustainability, and that's including the focus and the resource we've put in internally, but also in terms of setting targets. Our scope 1, 2, and 3 targets are currently being validated. And in fact, just after the year end, we were awarded, the FT awarded us one of the 300 companies in Europe who've made the most progress relative to their revenue growth. So it was great to get that external validation. In terms of societal, we focus very much on our people, and that includes the communication with them. It's working with them. We've obviously made enormous strides this year in terms of flexible working, how we communicate people, how we work with our people, and how we all want to work together going forward. And that's been a really strong dialogue all year. And we've also been very specifically focusing on our diversity and inclusion, and that ranges from we were lucky enough to appoint Baroness Lowly Young to our board. And when I say luck, I mean Nigel having the foresight and Lowly Young wanting to join us. And she really is an absolute leader in this area and has been a huge benefit to us. And alongside that, we've been focusing on specific initiatives with the aim of diversifying both our staff and our publishing. And then on the governance side, just to highlight here that we have a very strong and diverse board, and we're in fact ahead of both the Hampton Alexander and Parker recommendations for our board. So then moving on to focus on our international operations. So back to you, Nigel.
Bloomsbury USA is located at 1385 Broadway in Manhattan, where we have over 100 employees. They had a good year with revenues up 27%. We largely publish books from Bloomsbury UK, but in addition, we have a team of editors there publishing US originated material. That would include our spectacularly successful Sarah J. Maas, who was discovered by one of the New York editors, but is now as big a seller in Australia or the UK or India per capita as anyone we've got other than J.K. Rowling. We also have a thriving academic publishing operation based in the New York office. Australia's always been a big market for us. They read more than a sort of direct demographic comparison to the UK would suggest. So our turnover, in other words, is even bigger than we would hope based on the population, £11.1 million worth of sales. And India, where we've had a historically successful company, but one which had a very difficult year in the year we're reporting on, and continuing to have a very difficult time since the period end for reasons that you'll all be aware of, to do with the severity of lockdowns as a result of the severity of coronavirus itself. Long-term growth strategy. Penny.
Thanks, Nigel. So we set out, every time we report, we set out our progress on our long-term growth strategy. And as those of you who've been following us for any time at all know that these are our key areas of focus. I think it's worth pointing out that we haven't changed any of these. Our experience, being challenged on, almost every single area of our business last year is that these have been the right and effective ways, not only for now, but for our long-term growth. So I'm very pleased to report that we've made really good progress on all these areas. So this is our focus on non-consumer business. It's how we grow and develop our consumer business. It's our international expansion. And we're now over 64% of our group revenue goes outside the UK. So when we're talking about diversification, we're talking around markets, so between consumer and non-consumer markets. We're talking about international growth, and we're talking about by platform. And that, as Nigel said, those are the things that make us unique among publishers. Then moving on to the next slide, we talk a bit about our other two key areas of focus around the employee experience and engagement. As Nigel said, our people are absolutely key to what we do. This is about continuing to make Bloomsbury the best place to work we can make it. And sustainability, which we've already mentioned. So Nigel, back to you to talk about our great list coming up.
Thank you, Penny. So none of that past achievement would be useful if we weren't keeping the momentum up. but we are. And if I may direct your attention to two books there, the Tom Kerridge Outdoor Cooking, which is another word for barbecuing, which is going to be an incredibly popular activity if we keep having summer weekends as hot as the one we had yesterday. That book, for any of you statisticians studying the Sunday Times bestseller list manuals section yesterday, you will have seen it was #1. Hurrah! Just out. It has some stunning recipes, including for fish. A brilliant lobster thermidor awaits you in there. By the way, if you become Bloomsbury shareholders, we extend a discount on our own books to our staff. The second book, which has been very well received by critics, is in the bottom right corner. The other, Black Girl, which is a kind of thriller based in a publishing house in New York City, not Bloomsbury. And then you'll see some of our strongest recurring authors, from Harry Potter, A Magical Year, through to the new Sarah J. Maas, House of Sky and Breath. And pictured in the middle bottom there is a new cook to Bloomsbury, Gino Diacampo. And finally, Lisa Taddeo, who is there, who had a huge bestseller with Bloomsbury over a year ago, called 3 Women. So, message is the pipeline is full. There's some industry recognition. We were voted Academic Publisher of the Year, as well as Best Exporter of the Year. We had 2 books on the long list for the Booker Prize. We were named Share of the Year in PI, Private Investor World. I was elected President of the Publishers Association. The summary and outlook on the next slide is showing why we are confident that this will go on. So this is my theory. Of course, my crystal ball is no better than any of yours, and indeed the whole world's crystal ball has been particularly murky in the last year, where for perfectly honest reasons no one could even predict when this lockdown would end, which we'll find out later today, I guess. But what we do know is that when people return to whatever the new normal is that awaits us, it's likely to include a partial continuation of working from home, perhaps 2 or 3 days a week in the case of many of the company announcements that we're seeing, such as that of John Lewis on the weekend. So what this means is that the circumstances that gave rise to the surge in reading, which include essentially more time available to you, not spent on trains and tubes and buses. Yes, some people did read books on those, and hopefully will continue to do so. But the real liberation that came of people being given back their day by not doing all the rushing about is one of many factors that, in my view, and that of many other people considering this question, is one of the reasons why the habit of reading, which was formed, or perhaps more accurately, I should say, reformed during lockdown, as people who had spent their whole lives, perhaps this includes some of you, reading business reports and analyst notes, rediscovered the joys of reading. And of course, the uses of reading are so manifold, from instructional books to cookery and baking, to books of escape fiction, of course, religion, meditation, do-it-yourself. There isn't really any subject in the human lexicon which isn't extensively covered by books. So it's up to us publishers, and it's up to us in Bloomsbury in particular for our own part, to have books which capture the mood of the nation, the zeitgeist, and just as we did with Why I'm No Longer Talking to White People About Race, or another bestseller I didn't mention, Humankind by the Dutch professor Rutger Bregman, a book that said that human beings are essentially good. And by sheer chance, we published it in the month, was it last May, that clapping for carers became a national phenomenon, and kindness was on the national agenda. So it's up to us to have the books, and our editors have shown a great track record of having their finger on the pulse of the age, even when we don't know what the future holds, and we certainly didn't know about this. So we have said, as a result of that, we feel the confidence to up the previous year-old, as it were, guidance for the financial year that for us will end in February 2022. Bloomsbury Digital Resources is on track to achieve the ambitious goals we set for its turnover and revenue several years ago. And we depend upon reading, which has shown its resilience and continued to be a popular pastime, as well as the starting point for all of the competing media out there. And it wasn't long ago when the most important and blockbuster movies in Hollywood were all based on British children's books, the sort of thing we publish, from Narnia to The Lord of the Rings to, of course, Harry Potter. I'll take you for 1 microsecond to this first slide in the Appendices, slide 29. And there you can see a clever, I hope, promotion that we did on Bloomsbury.com in the final 2 months before bookshops reopened. We shut this promotion down on April 12th when UK bookshops reopened, because we didn't want to compete with our own beleaguered customers. But there you see our motto: let books liberate you from lockdown. And if you clicked on any of those windows, you were then taken to lists of about 12 books in each subject area, presented in the same format as a Netflix screen presents films to you in a particular subject area. So it had the look of familiarity to you. So that's just one thing we did. So there endeth the presentation, and back to you, Mark.
That's fantastic. Nigel Penny, thank you very much indeed for that presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. Nigel Penny, before we go on to the live question, we have received a number of pre-submitted questions from investors, and perhaps, Penny, I can address these to you to start with. Excuse me. The first one's read, can you give a little more colour on the level of recurring sales within digital?
Yeah, thanks, Paul. So one of the reasons that we have been investing in the non-consumer side of the business for over 20 years now has been the attraction of the higher margin level of business, but also it's a more predictable revenue stream. So you are less likely to have the breakout upside that Nigel talked about as being the sizzle, the potential for consumer upside, but it is a higher margin, more predictable revenue stream area. and that generally applies across both print and digital.
Fantastic. Thank you very much indeed, Penny. The second question we have here is, what can you tell us about the gross margins in non-consumer?
Yes, well, I partly covered that. I think the point is that generally the non-consumer tends to be a higher margin business, which is part of the reason, as we say, we've been strategically investing in it for a number of years. So I think we've seen pressure on margins in last year, but equally you can see from the as we've talked about, over 81% contribution from our highest contribution digital product. The digital side of this business is very attractive.
That's great, Penny. Thank you. That concludes the pre-submitted questions. Perhaps, Penny, if I may just ask you to click on that Q&A tab, and where appropriate to do so, if you could read out the question and direct it to Nigel or take it yourself, that'd be much appreciated. Thank you.
Thank you, Paul. So the first one is, I think, one for Nigel. What are we looking for when we're making acquisitions? And any colour we can give on those.
Thank you very much. Well, we have fairly strict financial criteria of the period of return on investments that we're looking for. But the most important thing is the value that an acquisition can bring us that we can't generate organically ourselves. So we're looking for unique content in the form of books that if we add them to our existing offering in the same subject area, will make, for example, one of our digital products go from being a nice to have product to a must-have product. To give you an example, we were fortunate to acquire from Lexis Reed Elsevier Hersham and McLean on divorce, and this is the leading database of, it's actually called family law, the leading database of family law in the land, and it meant that every barrister and solicitor in the country who was in family law would probably need the Bloomsbury products that it was embedded within. So we're looking largely for niche infill content. We're looking to grow the backlist of our company. We're still a relatively new company. It's only 35 years since I started Bloomsbury with 3 other publishers, and we haven't had the benefits of 100 years of backlist as some of our larger competitors have, the works of Hemingway or Steinbeck or even Kingsley Amis. So we're trying to build up the back catalog so that we have more and more revenue, which ticks over, as it were, almost without human agency.
Thanks, Nigel. One of the other questions is, are Bloomsbury making more direct sales to consumers? And what's the outlook for distribution? This, I think, very much speaks to, as well as Bloomsbury.com, our own website that we've showcased. We also, one of the appeals about our Bloomsbury Digital Resources business is exactly that. There we're making direct sales to consumers. We have directly the relationship with the academic institutions. That's a very appealing side of our market. So we're always looking to increase our direct sales, and equally we work very closely with wholesalers and significant retailers, both offline and online, for our sales. Thank you for the comment about Piranesi being an incredible book. Thank you for publishing it. You're welcome. We're very proud of that one. And then the question about talking about BDR opportunities beyond this year. What we've said about that is we can see, I think we've shared the potential in this market and how strong it is for us. We haven't yet issued guidance about where we think that can continue growing, but I think we obviously see great potential, and we're continuing to focus very hard on the growth there. And then I think a question. One question has been, Nigel, for you. How will bookstore closures affect the business? I think, first of all, we haven't seen too many bookstore closures, so that to make that point. And then, Nigel, to you.
Well, total disaster, obviously, we need and love our customers. But in fact, the Booksellers Association has seen a growth in the number of members, so we hope that will continue. Obviously, these are shaky times for all retail on high streets and main streets in the will we, won't we times we live in of full reopening. I think the general picture is that bookshops in towns, cathedral cities, villages are doing very well, have been since April 12th, and also did in the summer reopening that happened from June 15th through to September 8th or whenever it was. But what's really suffered are the big city center bookshops, railway station bookshops, airport bookshops. They've all been hammered. But fortunately, they're in the main part of larger organizations that have other outlets elsewhere. So they've weathered the storm. That would obviously include W.H. Smith and Waterstones, and to the extent to which that's similar, Barnes and Noble in the USA. So we've done what we can to support customers who've been in difficult positions, extending credit where that has seemed sensible after a careful look at the figures and in consultation with the credit insurers in the wings. So it seems unbelievable, but the bookshops do seem to have struggled through to this point of nearly June 21st or nearly June 19th, July 19th, whatever it will turn out to be tonight. And that is in large part due to the resourcefulness of booksellers, both independent booksellers, specialist booksellers, chain booksellers. They've done every imaginative thing under the sun, from click and collect arrangements before the reopening where people would go and pick a bag up that would be placed outside the door for them, to a significant ramping up of their own websites. Everybody has a website. Everybody's capable of selling books by mail order. And we saw a big uptick in that, not least from Waterstones.com, Tesco.com, Blackwells.com, and of course our own website, Bloomsbury.com, where we poured a lot of effort in social media promotion to direct people to our own home delivery service, which had a very successful period.
Thank you, Nigel. Well, I think we've covered the key questions here. Thank you very much, everyone, for joining us. Nigel, were there any closing remarks you wanted to say?
Just to say that Penny and I spend the fortnight or so after an annual results announcement on a largely institutional roadshow where we're meeting people who own up to 10% of the shares in our company. But we're always very keen to communicate with retail investors, if that term accurately applies to many of you on this call. It's very good to speak directly to you. I think we're pretty much the only book publisher directly quoted on the London Stock Exchange. Other companies are there buried within large media conglomerates such as HarperCollins Publishing within the Murdoch listings. But we're an interesting case of a sort of virtuous circle. You can see our books being reviewed in your daily lives as consumers reading the newspapers and so on. You can see our authors being featured on television and so on. You can then see our books hopefully going in the bestseller list from time to time. And you can then see our revenues go up, and you can then see sometimes our share price responding as well. So we're a very public company. It's all transparent and out there for you to see. So I offer you that thought, and if it makes sense to you, I don't think I can advocate our shares to you, but come on in, the water's fine. Thank you.
On that note, Nigel Penny, thank you very much indeed for updating investors over such a comprehensive presentation. Could I please ask investors not to close this session? You should be automatically redirected for the opportunity to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of Bloomsbury Publishing PLC, I'd like to thank you for attending today's presentation. That now concludes this morning's session. Thank you and good morning.